All right, so this is just crossing the 100. We should have it crossing to the upside. All right, so anyway, good that we got notified. Remember, our hedges now are in play. We should have made some money on the downside or upside, sorry, all the way to 105,224. I believe this is just profit taking. We're seeing, of course, positive, continuous positive momentum on the 15. This is just a 5 minute. If the hedge gets open, take profit just $100 lower, and then have another hedge down here. And you remember we have double hedges. We're going to protect our holding. All right. Actually, as the market moves higher, we usually move the hedges to a level 3. I probably forget to tell you about this. Let's take it to 15 minutes. So we didn't do 200 and 106 yet. We just did 105 to 200, and it looks like the market knows we want to target 106. So we just did 38.2, but never mind, we can still control the situation through hedges. We'll look at these now in more detail. Bear with us a few moments. We're seeing a level 1, but this appears to be the only level 1 we can get. And there's been a head below this, and this is a shoulder. We're going to be doing a shoulder to the left, or to the right, I'm sorry. Take it now back to 5 minutes. Take it to 15 minutes. Stick with the 5. Take it to 3 too. All right, very mild. So we have a bounce. All right. Again, if we have the hedges, they must have taken money. One of them must have taken money. So if we are hedged at, we were hedged 103,600, I believe. We got 103,400 or 103,369. Even hedging at 103,500 would have taken profit at 103,400. If you still have the hedges, of course, we were having a hedge locked to lock in the negative PL. If we see a bounce, we just have take profit at entry so that we close out both hedges, and then we do the hedges as the market moves higher. If the market is still going, we have to be very, let's say, adaptable, right, to the market action, not to act in a premature manner, but adaptable means that even if we close the locking hedge at entry, we can always have the locking edge here. So assuming I'm able to close both hedges, I have no problem. I shouldn't be afraid. The market, if I'm able to close both hedges, I've made a bit of money. The market bounces, I'm still holding the longs. If the market retracts, because I'm not really sure, I will have the same 2 hedges back here, just below the local market that has been established. Take profit, $100. Take profit, $50. Hold one locked hedge, one that will not take profit, the other one take profit, so that I always have fixed my negative PL. If my negative PL becomes uncomfortable, the money that I've made on the first hedge, I should reduce any size, very small size of the negative PL, and still hold the longs. We believe all that has been going on at this point is, so at this point we have done a leg 3. I have a 1 and a 2 here. I have a 3 and a 4, and I have a 5. Why would I consider this? Because the 1 and the 2 shows negative momentum, even on 3 minutes. This is internal. Everything else becomes positive, and this is the first negative leg. So I had a 1 and a 2, I had a 3 and a 4, I had a 5. That's all. 5 has not fine. So this is leg 3, and I'm having a 4A, 4B, and a 4C. That's all. So some kind of. If I understand the context, then I can navigate my hedges and my longs around the market volatility that is going to unfold. I presume I'm going to have a 4A, 4B, and 4C. So again, leg 4 may bounce at level 1. Doesn't have to bounce at 50%. But I can now understand that I am correcting from 2 to 3. All right? Just focus on the fact that the lump, complete continuous positive momentum lump that you see on any time frame is one complete level 3. So level 2 ends here where you have negative momentum. Level 3 ends here where you begin to have a level 4 negative momentum. If I take this to 5 minutes, I'm not seeing negative momentum. So if I take this to 5 minutes, I'm not seeing negative momentum, but I'm seeing a bounce just above an internal level 2. And of course, I can understand and relate to that this is an internal level 4 that will still drive the market higher, that I bounce 50%, that I'm going to either do 5 immediately before I do a higher degree 4 that will show some negative momentum on the 5 minutes. All right, and that what I'm seeing on the 3 minutes is short-lived. Therefore, my hedges will not open again. And wherever I have my last long entries, I should restrict my take profits maybe to entry slightly higher, $50, and then the next level higher I should take it out. So for instance, if I had running buy stops all the way to 105 200 and I was going to be taking another buy stop at 105 300, I will close out 105 200 at 105 250 or 105 230, and the next level 105 300 I would cancel it. 105 400 I would cancel it, leave the rest. All right, and probably the market retracts and I will begin to redo entries back to back, buy stops once 4C is finished. All right, all the way back to 106, so long as I'm seeing bounces that have continuation on the 5 minutes. If I see the 3 minutes become positive, because this is a bounce out of the 5 minutes, so I'm still getting a 4, I'm getting a 5, then getting an E and a B and a C, and this A and B and C will establish that my neckline is here. And I have a massive head here and shoulders. All right. I want to make sure this is the next neckline, whereas I want to make sure that all of my buy stops should end now at 105, 290, 105, 300, 105, 200. Because the next level of buy stops that I'm going to be implementing, I will need to see positive momentum, or I believe I should be seeing positive momentum on the 15 minutes, meaning the market bounces, it takes out the neckline. All right. And I begin to implement, yes, at the level 4, bounce out of the shoulder levels. But if I take out the neckline, I should be implementing all the way to 108 this time, or maybe still 106,500 buy stops back to back. So we just take it from one level to the next. You need to see this internal 1 and 2 and then break out into 3. Maximize efficiency, that's how we look at it. Again, we should have no fears if the market continues to retract. We understand now that we can go all the way to level 1, and we still have the hedges just below the market bottom. Take profit, $50, $175 is best, and this can take a long time, so you don't want to be upset, meaning it can be a leading diagonal to the downside, we'll always have the hedges below the market low. Take profit $50, take profit $75. Liquidate what you have long higher up. If the market moves higher, of course, we are in a position to liquidate at entry what we have higher up.